Maverick traders, welcome out to your market roundup, January 8th, 2024. Corey here with you. Hard to believe we're already moving right along in 2024. Time flies when you're having fun. Let's get to it.
We are excited to announce the Maverick Trade Collective. Our exclusive program offers you a unique opportunity to immerse yourself in the world of professional trading. With the Trade Collective, you gain access to a vibrant community of traders and an exciting real-time trading experience. Joining our elite group means you'll be witnessing seasoned traders in action, learning the art of portfolio management, and mastering advanced basket trading option spreads. The Trade Collective will trade a real-time portfolio, entering trades weekly and manage them in real time with the collective group. This is a window into professional trading, where expertise meets collective success. The Trade Collective starts January 2nd for all Maverick traders. Invitations will be made via email at the end of December. We are excited to bring a live, real-time trading experience to Maverick traders.
So as we take a look at the markets here, today was a bounce back day. We had been in this corrective phase, this little pullback that you'll see in the Dow, S&P, NASDAQ charts, but today was the pivot higher. You can see the returns, S&P up 1.5, the NASDAQ up 2, Russell 2000 up 1.8. The big sector laggard continues to be energy. We've highlighted that sector. It's just an underperformer. As oil prices go, so go the energy sector. On the daily news, Boeing has grounded more airlines as they continue to have problems with loose ends and problems with bolts and things coming loose and all of those things, and that's not what you want to hear when you're up in the air at thousands of feet. Tiger Woods and Nike partnership ends. This is after 27 years together. Nike stock, though, held in there pretty well. Seems the market was expecting something along these lines. Advanced decline line, 3/4 of stocks advancing, and the 50-period moving average really shows that we're still in that bull market environment. 80% of stocks still above that 50-period moving average. Now, as you look at this S&P chart, you can see we were on a little bit of a pullback. There was an expectation for some volatility on Friday on the jobs news, and those jobs numbers just really didn't bring volatility. Kind of a spinning top-like candle, almost a doji-esque. But today we come back in and the market's pivoted higher, and they pretty much advanced all day long. Very close to a Maribozu candle, which is a candle with no wicks. You can see just a little tiny shadow, a little tiny wick there on both ends, but still hanging in there and really kind of hanging within this zone, this high base area that we've been in the past couple of weeks. Now, if you back this chart out and look at a really, really long-term chart, what I wanted to highlight was this 4,800 level. This was the top, the all-time high in the S&P. And so as we drag this line over at 4,800, look at where we've struggled and stalled out. Is just right there at that resistance zone. So that's what we're dealing with, was the prior all-time highs, that prior resistance. And stocks have memories that way. People are taking profits against that zone. There's the potential for a pullback. If you think that this is a big cup, which I tend to think it is, there's a potential for a big pullback back to about 4,400. Now, what's 4,400? What's right down in there? That's about the cup, or the handle size, pardon me, of a cup and handle. So in a cup and handle pattern, the handle bottom here is usually about 30% of the size of the cup. The cup is 4,800 to 3,500. That's 1,300 points. 30% of that is about 400 points. It's like 390. So that would bring us back to about 4,400 or 4,410 if you want to be really specific. But right at about that 4,400 is where, frankly, just a kind of ho-hum give back in the markets could occur. If we just go and blow through resistance, well, all bets are off. But if this continues to correct back, we could go all the way back towards about 4,400 before there's an aggressive amount of buying. Now, let me say that we're clearly still in a bull market, uptrending environment, but we've got to be aware that this resistance level could hold. The first sign that there is trouble would be that your inability to break out above 4,800. So we'll be watching that. NASDAQ chart, very similar. We had gone below the 20. Today's price action gets us back above it. The uptrend is still intact. No reason to be bearish by any means. But if a correction occurs, look, most years there's at least a 10% or so correction. That 4,400 level I'm talking about in the S&P, that's about 7% lower. It wouldn't be like the end of the world type of thing. It's just a ho-hum. Hey, you get downward trends with an upward secular bull markets, and it would be of that variety. So I'm kind of against this 4,800 in the S&P. I don't want to stick my neck out too aggressively. We'll just continue to trade and look at the best setups possible. Clearly, still a lot of green, led by the NASDAQ higher. All of the big tech names, the big names of the world, they're all up in the magnitude of about 2% or so. Look at where the red is, right over there in energy. Oil got hammered today. The energy sector, big underperformance. So as we look at our outlook and expectations, the monthly outlook still bullish overall. And frankly, today's rally gets us back above all those moving averages. So still intact. You still got to expect that there's probably more upside than downside in the charts. Potential bulls, neutral, and bearish trades. Now, today I want to highlight a couple of neutral names. Google and Starbucks are on the list. They're popping up on some neutral scans for me, but ultimately they're charts that are not performing in an up tape, but I'm not so sure that they're going down a lot either, which really sets up well for a neutral style trade. Let's look at a few of these different names here. We're going to start with CrowdStrike. CrowdStrike has closed at a new high. So we have officially broken out. This closing price is above the prior high here, the prior closing high. So this is an official breakout with an uptick in volume. My expectation is that tomorrow there could be a little bit of overlap, but ultimately another pile-on day would be what I would be anticipating. I think CrowdStrike, for a bullish trade, you could look at a bull call spread, something where you're just saying, hey, I think it's going to be higher for a week or two. That would be my expectation, is this type of name outperforming where the market hasn't broken out yet. This is already at a new closing high. That's relative strength compared to its sector, compared to its industry, compared to the market as a whole. All of the characteristics as far as lighter volume in the correction, stronger volumes on the way up, it checks a lot of boxes for bullish trades. Here's Starbucks, and I have this one on the neutral list. You can see this gap area. When there's a huge gap, where you gap to and where you gap from becomes significant zones. And for me, that's a range between about 92 on the low end and 100 on the top end. And Starbucks sets up well for a butterfly or some type of trade in that vein. So if you have your risk graph, here's your break-even level. And you make money up here, you lose money down here, and we could build some form of a butterfly style trade where our reward potential is much greater than our risk, and it could be in a range where between 100 and 92 you're profitable with maybe max gains at 95 or whatever that number might be. So something along the lines of, I could see like a 90, 95, 100 call butterfly, something along those lines, which is really neutral. It has a zone here of profitability, and it would only need to stick within this zone for a couple of weeks to be successful. Starbucks, again, checks a lot of boxes for that style of trade. And then last but not least, another one in the energy patch, continuing to underperform. I do like one name here in the energy space because it has some Warren Buffett, Berkshire Hathaway support, but it's also bearish. It's Oxy. Everything else I've kind of looked at in a more bearish tone, and so I'm sort of playing the sector where I've got one stock that I like and a whole lot of stocks that I don't. The one stock that I like hasn't been performing either, and the market is the ultimate teacher and says, okay, this just isn't an area that works. So you look at Apache, it broke below this zone. All bets would be that it would continue lower. Here's what would be, I guess, the only saving grace. Imagine it quickly recovers. Let's say tomorrow it bounces right back above this support. This might be the exhaustion low. This could be a little false breakdown, in other words. So tomorrow's price action, if you finish bullishly, I won't enter any sort of bearish trade. But imagine there's a red candle here and it's just continuing to the downside. You can put on kind of boring style trades, but a little bear put spread, something that targets it to be below 33, 32, 1-to-1 reward to risk ratios. I wouldn't be super aggressive, but everything that's bearish in the energy sector continues to pay off. I've had bearish trades on the XLE, which is the energy sector ETF, but those bearish trades just, again, they continue to pay off. So if it ain't broke, don't fix it type of idea. As we look at the markets, be aware of that 4,800 level in the S&P. We're right up against that. We've got the CPI coming out on Thursday, and earnings season kicks off this week. So all of the big financial names, Bank of America, Citi, JP Morgan, Wells Fargo, they all report at the end of this week. We also have Delta Airlines and Taiwan Semi, United Health, other names, other companies that will be reporting. This is the official start of earnings season. Hope you enjoyed today's market roundup. Have a great week. We'll see you next time.